Good morning, everyone.
Morning.
Morning.
Good morning.
Good morning.
Good morning.
Good morning.
Everyone.
We will start shortly. We're just 2 minutes ahead of time. Hi, Verity.
Good morning, Sarah. Nice to see you.
Same here, man.
Sarah, can we just give it 2 more minutes before we get started? I see a lot of people still need to log in. Happy with that.
Yeah, comfortable. Thanks, Verity.
Right. Good morning and a very warm welcome to our Estate Administration Unlocked webinar. Thank you so much for joining us on the day after a public holiday. Just a few housekeeping rules, which I'm sure Sarah will add to in her introduction. But we'd like to keep questions to the end if possible. So throughout the webinar, you are welcome to add your questions to the chat. And once our panelists have stopped presenting, I will then pose those questions to Sarah, and she will then present them to the relevant panelist. Now, it is my great privilege to introduce you to our moderator, Sarah Nkwana. Sarah is currently the Head of Estate Services at Absa, and she brings over 18 years of experience in the financial services industry, with a background spanning banking, insurance, and fiduciary sectors. She possesses a diverse array of qualifications. So if we can just keep on mute, please. Thank you. She possesses a diverse array of qualifications in banking, wealth management, insurance, and strategic leadership, as well as learning and development, in addition to her entrepreneurial ventures. Sarah is a registered industrial and organizational psychologist and is currently a PhD candidate. Sarah, I now hand over to you to introduce our panelists. Thank you so much.
Great. Thank you for that introduction, Verity. And upfront, let me thank you for helping us put this webinar together. Just good morning to everybody joining us online and to our panelists, which I will introduce shortly. And as Verity said, this has been a long wait. And yeah, a very warm welcome to our second installment of the Legacy Planning Series, Estate Administration Unlocked. Now, this could be where you're thinking about yourself, where you're saying, I need to plan for when I'm deceased and to leave my people with peace of mind. Or it could be you are faced with a situation where you've lost a loved one and you need to understand the process itself. You could have questions like, who's involved in the process? Who are the various stakeholders? What does the process involve? What are the challenges could I be faced with? Now, to answer all of those questions, I'd like to introduce our panelists, starting off with Shireen. Shireen Jansen is one of the regional managers in the estate administration services within Absa Trust. She has 30 years banking experience. She possesses extensive expertise that spans from retail and non-financial banking services, specializing in fiduciary field of estates administration. Her academic credentials include your certificate in marketing, a certificate in banking, an advanced diploma in estate administration, and also a Bachelor of Commerce in Law degree. We also have our second panelist, and that is Renee Murugan. Renee, also a regional manager in the KZN area within the estate administration services. Renee possesses a diploma in deceased estate practice. She also has a BProc Law degree and an MBA. Her career, in terms of her career, she's been practicing as an attorney for 3 years and has been within the estate administration within Absa Trust for over 24 years. I'm also happy to introduce our guest panelist, who's no stranger to this webinar, and that is Delon Subramanian. Delon heads up our Advice and Fulfillment Department within Absa Trust. Delon is a well-rounded professional who's worked within the financial services industry for over 18 years, including serving in the legal aid board and in private law firms. He's also worked in the retail segment as an entrepreneur. Delon holds a Bachelor of Law degree and also various qualifications in administration and taxation of trust. I'd like to kick off today with a very short video. So Verity, if I can just ask you maybe to play that video for us before we kick off. Thank you for that, Verity. Every time I play that video, it really brings reality home. And I like how the video started. It says, truth is, there is life after loss. And with that said, I'd really like to encourage us to really think about, I've spoken to so many people who come across and say, yeah, but I'll be dead. Why must I worry about the affairs of when I'm dead? We've got families, we've got loved ones. And it would be nice to know that they are catered for. And, we've left them with a peace of mind. Before I kick off, I'm not sure if all our panelists did show, if I can just ask them to switch on their cameras. And as we start, then everybody can switch off. We'll have the ones that are speaking on camera. I've already done the introduction. So if I can ask Shireen, Renee, and Delon just to come on camera for us, please. And Verity, if you can just confirm, I'm not able to see on my side. Okay, yeah, they are there. Perfect. So that is Shireen and that is Renee. So it's great to have a panelist and really looking forward to this webinar. So maybe just to kick off and just a bit of a reminder, what is the estate administration process? And I'm just going to give high-level definition. It really is a process where one or an executor manages the financial affairs of the deceased. And this really involves collection of the deceased assets, paying off of the debts, including SARS, and whatever that is left within the estate. That would then be paid over to the beneficiaries or the heirs. It sounds very simplistic, but is it really that simple? And maybe just to kick off and just to have a chat to Shireen and understand. My understanding, and I want to put it in 4 blocks. If I look at the full value chain, somebody passes on, and that's where you have to register or onboard an estate. And then there's the whole process where you have to speak to the master, you engage to all the relevant stakeholders, and that would be the second part. And I believe then that the third part would be where there's distribution happening and we finalize the estate. And I really want to take the conversation in those 4 blocks. And starting off with the intake or onboarding of registration. So somebody comes on board, somebody's deceased, and they are confused. They don't know where to start. And the question is for me, Shireen, and I'll pose this to you. Where do we start? Who do you contact? What documentation is required to ensure that your estate, the deceased estate is registered and there's no delays? Do you want to maybe perhaps take us through that, Shireen?
Yes, thank you, Sarah. It is indeed a very overwhelming experience for the family. However, once the funeral formalities have been finalized, it is important for the family to try and locate the will if one exists. The will not only provides details of how the assets of the deceased must be distributed, but also whom the deceased had nominated to be the executor of his estate. And this is the person that must be contacted and notified of the deceased passing. Once we receive the estate or notification of the deceased passing, do we arrange a preliminary meeting with the family to not only confirm the details of the will, establish who the beneficiaries are in the estate, but also to compile an interim inventory of all the assets and the liabilities based on the information that is available at the time of the meeting. Okay. So that is the initial step. Following that, we do request the family to provide certain information, and the documents typically required at this point in time would be copies of the death certificate, all certified. And it really helps if this information is readily available in terms of streamlining the process going forward. We also require ID documents, marriage certificate if applicable, title deeds, motor vehicle registration certificates, and any other information of relevance or that may be applicable to the estate. So that encompasses the onboarding process. And depending on the availability of the family, the number of the beneficiaries that's involved, can the process take a couple of days, as well as how forthcoming or easily available the information is that's required to proceed with the administration of the estate.
Thanks for that, Shireen. So and just to find out, so can anybody just approach the bank, say the will is with Absa? Should it be the actual beneficiaries? Could it be family members? Who can register an estate?
So, in terms of the Administration of Estates Act, Sarah, the surviving spouse, next of kin, or any persons in control or in possession or custody of the deceased assets has a responsibility to report their estate. So where there's a will, either with a financial institute or an attorney firm or any other institution, it's best for the next of kin or the surviving spouse to contact these persons to assist with the reporting of the estate. I also at this point wish to mention that an estate must be reported within 14 days of the death occurring. And also the circumstances that is further indicated in the Estate Act is that there must be a will, or if there's a will or assets, is there a requirement for the estate to be reported. So a document that also purports to be a will or that appears to be a will also falls in scope of this requirement.
Great. Thanks for that, Shireen. And I take it that, I mean, for the court documents that you have mentioned, if any of those documents are not in place, then it would be difficult to continue with the registration of the estate.
Absolutely, Sarah, especially the documents specifically required for the reporting of the estate for letters for executorship to be issued. The Master of the High Court is quite specific in terms of these requirements, and it is important for these documents to be made available.
Thanks for that.
Yes.
Sure,
Sorry,
Shireen,
Sarah.
continue.
Yes. So once the required documents are received is the next step in the administration process. And this is quite important in terms of registering the estate with the Master of the High Court. Like I indicated, it's not only to inform the Master of the deceased passing, but also to obtain letters of executorship. There are certain prescribed forms that must accompany the reporting documents, and these forms include a date notice form. The date notice form includes personal information of the deceased, and I'd like to touch on a few sections of the form that's quite important. One being the address of the deceased where he resided in the last 12 months of his passing. This will also determine in which jurisdiction the estate will be reported, in the Master's office that will have authority in terms of monitoring the administration process. Another important portion of the form relates to the deceased marital status, whether he was, and if he was married, whether it was in or out of community of property. If in community of property, the executor will be entrusted with the administration of the joint estate. So the assets and liabilities of both spouses will have to be taken into account during the estate administration process. Another important piece of information relates to a predeceased spouse or a first dying spouse. So it could be that certain restrictions or limitations were created in the estate of the first dying spouse that might have bearing on the estate of this estate. And the executive would have to investigate those implications. And then lastly, what I would like to mention is divorced spouses, or if there is a divorced spouse. So usually there would be a divorce order together with a settlement agreement, and the executor would have to establish if the conditions of the settlement agreement had been fulfilled, and if not, it is also something that the executor would have to give attention to. So so these are typically the documents together with death certificates, ID documents, etc. that are lodged to the Master of the High Court in the event of a valid will existing. I have not touched on the requirements for intestate succession. There are a different set of documents to determine, amongst others, who the Master may consider to be appointed as the executor of the estate.
Thanks, Shireen. So, I mean, we just started, and this is right at the beginning. That's a lot of information that you've just shared. I take it that within Absa, then, you know, there would be a document that lists all these court documents that are required and all the information, and there will be somebody who can assist with verifying all that information that's required. Am I correct?
That is correct, Sarah. We do make available a list of documents just to support the family in what they could typically look for, and that would be applicable to their estate. And in fact, I want to go as far as saying it's actually quite wise for the living person to actually compile these records and to inform the family members where they can be sourced to make it easier with the reporting of the estate to provide this information.
Thanks, Sharon. And that's quite critical because, if this information is not shared while somebody's alive, it's difficult for anybody, while they're going through mourning and those emotions of loss to try and get all this documents and information. So now, Shireen, all the documents are there. You've spoken about where there's a will. We haven't really touched much into interstate, and I'm sure when we continue with the conversation, we'll touch on that. Now, we're at a place where all the documents are provided, all the forms are filled in, the estate is lodged successfully or registered successfully. What then is the next step?
Okay. Sarah, so letters of executorship are then issued, and usually within 2 to 6 weeks, depending on the master's office. There is an important document and basically the mandate of the executor and a formal appointment letter that authorizes the executor to address or to attend to the administration aspects in the estate. Once letters of executorship are received, do we attend to, amongst others, the following? An estate-led banking account is opened. We also place the first statutory advertisement in terms of Section 29 of the Act. And this advertisement basically invites all debtors and creditors to lodge their claims with the executor within a period of 30 days. This advertisement, or the response to the advertisement rather, also assists the executor in establishing the solvency of the estate. Next, do we notify the relevant stakeholders in the estate, and this could include the South African Revenue Services, banks, insurance companies, and other institutions. Or we inform them of the deceased passing and also request what we call certificates of balance to confirm the asset or the investment or the claim as a date of death. Should there be fixed property, we arrange for valuation of the fixed property and the movable assets, and we'll deal with any other aspect that would be relevant or in preparation for the next step in the estate. So I want to mention that each estate obviously differs and will be addressed according to its merits and any specific distinctions that may be noted with the information that is received.
Thanks, Shireen. So if I understand, you spoke about letter of executorship. Am I correct in my understanding that an executor cannot start administering the estate or start with the estate administration process when we haven't received? So one has to, as an executor, they have to apply for letter of executorship in order for them to start with the process before you can start the collection of assets, payments of debts, and so on, the process that you've just explained. Am I correct in my understanding?
Yes, absolutely, Sarah. That is the mandate and the authority that is only once issued can we act in accordance thereto. And later in our discussion, Renee will expand a bit more on the duties and the responsibilities of an executive.
Great, thanks for that. So now the assets are collected. You spoke of advertisement, you spoke of collection, you spoke of it being in contact with SARS. And it's a lot of parties that are involved there. And I take it that in this process, then assets are collected. We've now paid the debts. I would take it that the next step would then be distribution. There is some monies left in the estates. How do you deal with the distribution?
Okay. Before we get to distribution, there is one other important part of the process, Sarah, and that is the drafting of the liquidation and distribution account. And this is done after the Section 29 advertisement has lapsed. We've investigated all the assets and the liabilities in the estate. We've received our documentary evidence in the form of certificates of balance or valuations, as well as claims that have been validated by the executor. Do we then proceed to draft what is called the liquidation and distribution account? And this is basically a summary of all the assets and liabilities in the estate and also deals with how the estate will be distributed, be it in terms of the will or intestate succession. The liquidation and distribution account is also completed or compiled in a prescribed format. So under assets would be the full description of the assets as well as the accompanying values. The administration costs will include executives' fees, master's fees, transfer cost, and any other admin related costs as well as the claims in the estate. Then the distribution portion of the account basically just deals with that, how the deceased bequeathes assets will be documented in the distribution part of the account. Once finalized, is the account lodged with the Master of the High Court for approval. The master will issue what is called a query sheet, wherein he will either note any further queries or comments or instruct the executive to proceed with the administration of the estate. After that, we lodge the next statutory advertisement, which is placed in the local newspaper and the government gazette for a period of 21 days. This advertisement invites all interested parties to scrutinize the account, and if they've got any objections, they may lodge their objections with the master's office. So assuming that the Section 35 advertisement has lapsed and we have not received any objections or none were raised with the Master of the High Court, may we then proceed with the distribution of the estate. So we start by settling all the claims and the creditors in the estate. We attend to the transfer of assets such as shares, motor vehicles, and also instruct the conveyancers to complete the transfer of the fixed property. We may at this point also attend to an interim distribution or provisional payment of the cash portion of the inheritance to the beneficiaries. It is also possible for a portion of the funds to be retained until the ultimate finalization of the estate. And the purpose for retaining some funds could be that we haven't received a final assessment from the receiver of revenue yet, or a deceased estate clearance certificate from the receiver of revenue, or the property transfer is still in progress. So that would then involve the distribution portion of the estate.
Great. So it sounds like the master is the main stakeholder involved. Before the process starts, they have to provide letter of executorship. And then we've got the liquidation and distribution statement that they need to approve. Some advertisements need to take place. This for me is quite interesting because that already shows that third-party dependency. And within the distribution as well, that can only take place once the final advertisement is done and a query sheet is issued. Am I correct, Shireen?
That's correct, Sarah. And what I also wish to mention, Sarah, is with the drafting of the liquidation and distribution account, it needs to be lodged with the master's office within 6 months of the letters of executorship being issued. So there are cases wherein we're not able to meet that requirement, and that often relates to the sale of assets where they haven't been sold successfully yet, or there's litigation pending in the estate that prevents us from proceeding with the administration process, or even family disputes that haven't been resolved yet. In instances like that, we need to request the master to grant us an extension to lodge the account. But ultimately, yes, the master does oversee the process, and we are dependent on a sign off or approval at various stages before proceeding with the next phase of the process.
And in terms of finalizing the estates, once the distribution has happened, can you just maybe take us through that, an understanding of what that entails?
So finalization entails the making sure that all the debts have been paid in the estate, all the assets have been transferred. We do also compile a reconciliation statement to account for all the funds received in the estate and all the payments made, and this is made available to all the beneficiaries in the estate. And furthermore, do we then close the estate? That would be the final transaction. And lastly, it is also necessary to scrutinize the master's query sheet to make sure that we comply with any outstanding requirements, such as providing an affidavit that all creditors have been paid and beneficiaries as well, providing proof of transfer of the fixed property, and also the bank statements.
Great. Thanks for that, Shireen. And maybe just my final question before I jump to Renee. You know, at different stages, you indicated timeframes. it could be, it takes 21 days for an advertisement, it takes 6 weeks, or it takes 2 weeks. Just overall, how long does it take to administer with a simple estate? How long does it take to administer an estate? And in a more complex matter, how long would that take as well?
Okay, so the process takes approximately 9 to 12 months, Sarah. But from my feedback or my discussion, you would note that there are quite a number of external dependencies that we are dependent on, and any delays in any of these environments does contribute to a delay in the finalization of any particular part of the administration process. So, as much as we'd like to finalize the estates quicker, we are unfortunately dependent on turnaround times and timelines of external service providers. With more complex matters, it could really take much longer depending on the issues that are being dealt with. With litigation, we find that that can be ongoing for quite a while. So it does complicate matters quite a bit.
Thanks for that, Shireen. At least that gives perspective. I mean, this is just the first part of the questions, and that really sounds like it's a lot. You made mention of different parties involved in the process. I just at this point want to jump to Renee. Renee, looking at that whole process, lengthy process, who are the parties or stakeholders involved, and what are their responsibilities? If you could just maybe take us through the main stakeholders that are involved and what their responsibilities are so that we have an understanding of that.
No, thank you, Sarah, for that. So Shireen just gave us an overview of the estate process, but it's also very important for us to have a good understanding of the roles and responsibilities of these key stakeholders in an estate administration process. But not only that, we need to understand that the impact that they have on the end-to-end estate administration process. So there are various stakeholders in an estate process, but today I'll just talk to the major ones. So firstly, we start off with the Master of the High Court. So the Master of the High Court plays a very crucial role in a deceased estate. The Master's primary role is to ensure an orderly winding up of the financial affairs of the deceased in accordance with legislation, whilst also protecting the interest of the creditors, the beneficiaries, the legatees, and any other person who may have claims against the estate. So the Master has extensive powers of supervision and as such oversees the end-to-end estate administration process. So what are the Master's key responsibilities? Firstly, they are responsible for the appointment of the executor. So the Master will assess all the reporting documents submitted during the estate reporting process and then appoint an executor to administer the estate. So the executor is nominated in a will or nominated by the beneficiaries when there's no will. So the Master will also determine whether the executor needs to lodge a bond of security for the execution of his duties. If all is in order, the Master will issue the letters of executorship, which then provides the executor with the necessary authority to act on behalf of the estate. The Master is also responsible for reviewing and approving the liquidation and distribution account. And as Shireen alluded to earlier, within 6 months after the letters of executorship is issued, the Master will request for the liquidation and distribution account to be lodged. The Master will then scrutinize the account to ensure that it accurately reflects all the assets, liabilities, and beneficiary awards before granting final approval for the distribution of the estate. The Master also has a very, very important task of overseeing the disposal of assets from an estate. So the Master will review the decisions made by the executor regarding any sale of assets from the estate. And the Master must grant the final consent for all property being sold out of the estate. The Master also acts as a mediator for any disputed claims which cannot be resolved by the executor or the beneficiaries or the claimants. The Master holds the executor accountable. So the Master has the power to compel executors to lodge vouchers in support of their accounts or to perform any duties imposed on them under the law. He will hold the executor accountable for the performance of all of his duties. Last but not least, the master ensures that the estate is administered in accordance with the requirements of the Administration of Estates Act. Next, and probably the most crucial to the master, is the appointment of the executor. So the executor will take complete control and custody of your entire estate on your passing. The executor must ensure that your estate is administered as per the law in accordance with your will, and where there is no will in terms of the Interstate Succession Act. An executor can be anybody. It can be a family member, a friend, or even a professional. So what are the duties of the executor in managing the estate? We must understand first and foremost that the executor acts in a fiduciary capacity. This means that they have the legal responsibility to act in the best interests of another party. So although the executor's duties can be vast, their primary responsibilities is to take full control and custody of all assets belonging to the deceased. They've also got to make sure that they provide for a maintenance for the family that was dependent on the deceased before the letters of executorship has been issued. Their other purpose is to gather information relating to all the deceased's assets and debts, including any document which is or purports to be the deceased's will. They've got to manage the estate by ensuring that the assets are insured, by settling the debts, by paying the taxes, and by distributing the remaining assets to the beneficiaries as stipulated in the will or in terms of the Interstate Succession Act. And as alluded to earlier as well, they've got to prepare and submit the liquidation and distribution account to the master for his approval. And last but not least, they've got to also keep the beneficiaries informed of the progress of the administration of the estate, ensuring transparency and addressing any concerns or queries they may have. The next key stakeholder is SARS. So SARS, remember the popular saying by Benjamin Franklin, in this world, nothing can be certain except death and taxes. So when we die, we still got to make sure that all the taxes are paid from our estate. So why is SARS an important stakeholder in the estate administration process? While you are alive, you pay taxes in the form of personal income tax. And personal income tax and VAT to SARS. When you pass on, your estate is responsible for payment of any outstanding tax which you may not have paid during your lifetime. But it will also be responsible, Sarah, for any post-death taxes that may become payable after your death. Then there are other types of taxes that needs to be paid, such as capital gains tax and estate duty. All of this must be dealt with before a tax clearance may be issued by SARS and before your estate may be finalized. Another key stakeholder is the deeds office. So where there is an immovable property in an estate, whether it is a house, a flat, or just a vacant land, this must be dealt with at the deeds registry's office. So the Registrar of Deeds plays an important role in the registration and preservation of property rights in an estate. All property transfers out of the estate to beneficiaries or purchasers in the event of a sale must be done at the deeds registry's office. They are also responsible for the issuing of duplicate title deeds where your title deeds have been lost, but they also manage and maintain accurate records of all property ownership transactions processed at that office. Finally, we have the beneficiaries in an estate. So why are the beneficiaries important? The cooperation and contribution of the beneficiaries is vital for the successful administration of an estate. The beneficiaries play an important role in the following ways. They assist the executor with the core documents to enable the estate to be reported. They identify the assets belonging to the estate. They assist the executor to solve for liquidity issues in the estate. They cooperate with the executor if there's a sale or redistribution of assets in an estate. And they cooperate with other beneficiaries to ensure a seamless estate administration process. So Sarah, I trust that this summary of roles and responsibilities will enlighten our audience on how important these stakeholders are in ensuring a seamless estate administration process. If one stakeholder does not play the part in the process, the impact will be felt all around.
Yeah, and I fully agree. And as I was listening to you, Renee, that's exactly what was I was thinking, that there's so many people involved and each one plays a crucial role. And if one stakeholder drops the ball, that delays the process itself. And I think for me, where I'm sitting and having gone through this experience before, it makes sense why we experience delays in the process. But Renee, I just want to touch on one thing. You spoke extensively on the executor, the roles and responsibilities of an executor, and really they are the main stakeholder that's responsible for administering an estate. Just tell me, what are the qualities that one should look for when selecting an executor? And what are the potential risks of choosing a wrong person? And I mean, I'm asking this question because as a normal person on the streets, I'm sitting here and I'm saying, can I just choose anybody? I've got my cousin, I've got my mother that I love very much, I've got relatives or friends. Can I just choose anybody? So what's the importance of ensuring that we select the correct executor?
Yes, Sarah. So the choice of your executor is extremely important. Remember that you are entrusting this person with your entire life's work, everything that you have built up during your lifetime. So your decision must be a well thought out one. So firstly, we've got to ensure that from a legal perspective, your executor is not automatically excluded from taking on the appointment. So in doing so, you must consider the following. Are they of legal age? So your executor must be of legal age to take on this role. The age of majority in South Africa is 18 years old. The next thing that you've got to consider is, are they legally incapacitated? Meaning, do they suffer from any type of mental illness where they are declared insane or not capable of handling their own affairs? And last but not least, from a legal requirement is, are they unfit for office? Have they committed a crime relating to theft, fraud, or allied crimes in other states where they were acted as executors previously? And secondly, on a more personal level, you must consider the following. Can you trust this person implicitly? Remember, this person is now taking control and custody of all your assets, so trust is key. Do they have any financial problems of their own? Your executor will be charged with handling the financial details of your estate. So choosing an executor with proven financial competence would be a smart move for you. The next thing to consider is, can they calmly, fairly, and impartially deal with potential beneficiaries and creditors? It is always a good idea to select someone who is level-headed and capable of resolving for potential conflicts that may arise after your death. Are they well organized and capable of multitasking? There's a lot of paperwork involved in the administration of an estate. So it is important to choose somebody with strong organizational abilities, but also someone who has time to deal with all the tasks that the role expects of them. Do they have the financial and legal experience? While this isn't mandatory requirement, Sarah, it will certainly be a big plus. If the individual that you are naming as executor of your estate does not have this level of experience, they can always work with qualified professionals under power of attorney to assist them in settling their affairs. And last but not least, do they have conflicting interests with those of the estate? For example, is your executor also a creditor in your estate? If that is the case, this can make him biased and partial to only his interest in the estate. So Sarah, going on to the question about what are the potential risks of choosing the wrong person for this role. So some of the risks are the maladministration of the estate. So it's failure to administer the estate end to end, failing to sign off on a liquidation or distribution account, failing to pass transfer of assets and serious dereliction of duties. There can also be gross negligence in the execution of their obligations. There's also the element of an increased risk of theft and fraud, especially if the executor is financially distressed. There can also be an element of failing to execute as per your will. And last but not least, and I think the most important one is what would the consequences be for your family? This could result in adverse consequences and emotional distress for your family. All of this will inevitably delay the estate process. So therefore prejudicing the beneficiaries emotionally and financially. So Sarah, choosing the right executor is in fact a big deal. Make sure that you apply your mind and take your time so that you choose the right person for this role.
Thanks, Renee. And I mean, I'm sitting here at once more and I'm trying to be in those shoes. And I'm thinking, if I were to choose, say I've now chosen an executor as a family member or somebody has selected a spouse to be an executor. You made mention of the fact that they could sign power of attorney where there could be an external executor. And you've sort of touched on that. I just want you to emphasize a little bit. What are the risks when there's an external executor who's not knowledgeable with the law?
Yeah, so that's a very good question, Sarah. So to avoid all the trouble, inconvenience, and sometimes heartache, it is best to keep the executorship with the professionals. So where the estate has an external executor nominated, either a family member or a friend, it is best to have that estate administered under power of attorney by a professional executor. So remember, professional executors have an in-depth knowledge of the Estates Administration Act and are the best equipped to offer you the best advice and expertise in this area of law.
Yeah.
They also will have fidelity cover or insurance protection to ensure that the estate and its beneficiaries are always protected and never prejudiced should there be ever a lapse on their side. And the master will, in most cases, call for the executor who is not familiar with the estate's deceased estate administration to seek assistance from a professional. So, Sarah, I trust that this sheds some light in general on how executors without knowledge and expertise can be assisted in this complex area of law.
Yeah. Look, it is that time for me to go review my will. And I mean, I've drafted it and I'm just thinking with all the information I'm learning here, I really need to go back and review some of the things that I've put in there. For example, looking at the executor. And I mean, the first video that we played, it says that there's life after loss of a loved one. And my question is, am I creating life or am I creating distress for the loved ones after my death? And that for me is crucial. At this point, I really appreciate your insights, Renee. I just want to shift the gears a little bit. And Shireen, I just want to move back to you. At the beginning, you spoke about distribution of the assets in the deceased estate to the beneficiaries. I just want us to go into a little bit into the detail there, just for all of us to understand. How are the assets typically distributed to beneficiaries according to the will, or in a case where there is no will, how are they distributed in terms of the interstate law? Can you just maybe take us through that?
In terms of a will, Sarah, I think it's important to mention that our laws respect the right of testation. So we have the freedom to leave our assets to whom we please. There are, however, certain limitations when drafting a will, and amongst others, they include um, bequeathing property, farm property in particular, to more than one person, so two persons or more. These restrictions have been imposed by the Minister of Agriculture, and it is not possible. So, where farm property is an asset in the estate, the testator will have to find other options of actually bequeathing or awarding those assets to his beneficiaries. One such form would be to create to form a company and for the farm property to be transferred in the company. And if there are multiple beneficiaries, they will have an interest in the company. Other limitations relate to minor beneficiaries and also surviving spouses. So where neither the minor beneficiary nor the surviving spouse have been adequately provided for in the will, may a maintenance claim be lodged against the estate in respect of their financial needs that the deceased has a duty to actually provide, and the estate needs to accommodate for. Another restriction would be bequeathing any amount, or making a bequest to a beneficiary that is discriminatory. So we may not discriminate in the form of gender, race, or religion, etc. This is not permitted by the law. What I've also seen is pension funds being dealt with in a will. So pension funds are specifically governed by the Pension Funds Act, and a board of directors will decide who will inherit, or how they will, sorry, not who will inherit, but who will benefit from the pension fund proceeds. So whilst the deceased may make mention of the pension fund in his will, it will basically just serve as a motivation or a guideline to the board of trustees, but ultimately the final decision lies with them in terms of the distribution of those proceeds. In terms of intestate succession, in the absence of a valid will, the estate will devolve according to the rules of intestate succession. And in a nutshell, the spouse, children, parents, and siblings of the deceased stand to inherit from his estate according to a specific set of rules, and also in a specific order. Just to illustrate a bit further, if there's a spouse and no children, then the spouse will inherit the full estate. If there's a spouse with children, then the spouse together with the children will inherit the estate. The formula goes into greater detail in that the spouse will inherit the greater of 250,000 Rand or a child share. So just to illustrate what a child share means, if the balance for distribution amounts to 1.5 million and we have a surviving spouse and 2 children, the 1.5 million is divided by 3 and each party will receive 500,000 Rand. Taking the same scenario, but the balance for distribution is just 500,000 Rand, the spouse will receive 250,000 Rand and the 2 children will share in the remaining 250,000. Sarah, intestate succession is not ideal in that somebody that the deceased did not intend to inherit may receive a benefit in the estate. And hence it is important to consider drafting a will and to bequeath your assets in a manner and form and to the parties whom you desire to do so.
Very insightful sharing. I'm glad I actually have a will, and I'll be clear in my will how I want my assets to be distributed, because I honestly, that doesn't sound good to me, that, my inheritance or my assets might be inherited by people that I did not intend to leave my assets to. Sharon, in an instance where, I mean, I come from a background in a culture where families are viewed as one. My sister's children are my children. She's currently, I mean, not currently, she's passed on. So I've taken on those children. I'm also taking care of other family members. In that case, what are the considerations when dealing with blended families and minor beneficiaries? Or you could find that I'm married and I didn't know that my husband had children out there. How do you deal with that? What are those considerations when dealing with blended families in terms of distribution and minor beneficiaries as well?
Sarah, in terms of the Estate Administration Act and our laws, foster children, stepchildren are not considered to be blood relatives of the deceased person, and hence are not considered in terms of intestate succession. So it would be in the best interest of all, especially if it is the desire of the testator, to include stepchildren and foster children in their estate, to do so in terms of a will. There is unfortunately no other alternative. They will be basically excluded should the testator die without a will, or the testatrix die without a will. They will definitely not be considered as a beneficiary in terms of intestate succession. What I've also seen in the past is cultural adoptions, where family members, and it's typically children, that are transferred from one family household to another. And this is often done by mutual consent or purely because of the circumstances surrounding the family at that point in time. This also falls in scope of foster or stepchildren, more actually foster children, or adoptions that have not been formalized. And unfortunately, again, in terms of intestate succession, they will not inherit. And so provisions need to be made in a will and be catered for these class of beneficiaries.
Thank you, Shireen, for that. I think while we're speaking about distribution, Renee, I'm gonna jump over to you. Before the distribution is done, what are the potential tax liabilities that can arise during the estate administration process?
Yeah, so Sarah, tax is something that we just cannot escape, whether we are alive or dead. So to this point, there are various tax scenarios that may present itself in an estate. Firstly, you're dealing with your personal income tax. So tax is divided into two categories on your personal income tax, and this is your pre-death taxes and then your post-death taxes. So your pre-death taxes, this refers to your personal income tax that the deceased was liable to pay up until date of death. So any tax liability that was outstanding as at date of death will have to be settled by the estate. Then there's your post-death taxes, and this will be your estate will be liable to pay. So this specifically refers to any income generated and liabilities that arise after your date of death. This income and expenditure after date of death must be allocated to each tax year of assessment until your estate is finalized. Then the other form of a tax that comes up in estates quite frequently is VAT. And this relates specifically to the businesses that you have within the estate. So the estate is liable to account for VAT for goods and services that form part of the deceased business. So from a VAT perspective, the executor will have to consider the following. Was the deceased registered as a VAT vendor as of date of death? If the deceased was neither registered nor liable to be registered as a vendor as a date of death, then the estate is not liable for the payment of VAT. However, in the event of the deceased not being registered for VAT as a date of death, was the deceased liable to be registered as a vendor while still alive? So if the answer is yes to this question, then your executor will have to register that business for VAT. So the executor represents the estate and is responsible for performing all of the duties of the deceased regarding that business, and therefore must ensure that the estate complies with the legislation regarding VAT. Next, we move on to capital gains tax, otherwise known as CGT. So when a person passes away, they are deemed to have disposed of all of their assets as at date of death. So technically, when you die, there is a change of ownership because the assets are now being transferred to the beneficiaries. This change of ownership, Sarah, can attract CGT for the estate. So SARS will levy capital gains tax if there's any capital gains or losses made during the transfer of the assets. So this capital gain or loss is incorporated into the income tax calculation for the deceased. The exception to this rule is if the assets subject to CGT is bequeathed to a surviving spouse. One must also note that not all assets are subject to capital gains tax. Assets such as your primary residence up to the value of 2 million or your personal vehicle, jewelry or furniture is generally exempted. Finally, but mostly the most common tax that comes up in an estate is estate duty. So estate duty is a type of tax calculated as at the death of an individual for property that is going to be transferred to your beneficiaries. This is the so-called inheritance tax. And this tax is imposed on the dutiable value of the estate. So estates become liable for estate duty when the value of an estate, after certain deductions and estate expenses, exceeds the estate duty exemption, which is currently at 3.5 million rand. The part that exceeds the exemption is known as the dutiable estate. So how is your tax levied? So a rate of 20% is levied on the dutiable amount not exceeding 30 million. And then a rate of 25% is levied on the dutiable amount exceeding 30 million. So your estate duty is typically paid by the executor from the cash in the estate or from the assets sold to raise such cash. However, it is not all doom and gloom. The Estate Duty Act allows for certain deductions to be made against your estate before any estate duty calculation can be done. So some of the most common deductions will be your funeral and deathbed expenses, including the cost of a tombstone. Debts that you owed at the time of your passing, for example, your home loan, personal loans, credit cards, overdrafts, and those kind of things. The administration expenses that your executor charges, including the costs of advertising for debtors and creditors, costs of advertising the account, and those kind of things, the executor's fees and the master's fees. There's also accrual claims by surviving spouses married out of community of property with accrual. So this is a claim made in terms of the Matrimonial Property Act. Another exemption is in terms of Section 4Q of the Estate Duty Act. And this is where you leave inheritance to your surviving spouse or your permanent life partner. This tax is only paid on the death of the spouse. But during the spouse's lifetime, there's no estate duty payable. And last but not least, any amount that's bequeathed to a public benefit organization such as charities, that will be exempt as well. So Sarah, I hope that this overview of estate taxes helps our people to understand the different types of taxes applicable to estates and when they do come into play. The amount of taxes that an estate must pay can be minimized through obviously proper financial and estate planning. So therefore, I just want to encourage everyone, if you've not already done your financial and estate planning, to please do so as soon as possible. Thank you, Sarah.
Thanks, Renee. Just latching on to that, and because I mean, what you've just said latches on pre-death taxes. And I think this is where I want to bring in Delon, who's our guest panelist. Delon, can you just tell us then what are the tax consideration during financial planning? Because that clearly impacts the tax during estate administration process.
No, 100%. So, Sarah, thank you. So, reducing taxability in your state requires meticulous planning and a variety of strategies. And I think Renee's quite eloquently touched on all of those, well, some of those points. But maybe just to reiterate, firstly, using the state duty, the threshold of 3.5 million, which allows for your tax exemption on your estate. This lets you organize your estate to stay within the within the limit. Thereby managing your tax obligations. Additionally, considering the Section 4Q, like Renee mentioned, of the Estate Duty Act 45 of 1955, which provides that no estate duty is owed on bequest to your surviving spouse or on deemed property like life insurance proceeds. I think moreover, Sarah, it's vital to also consider another point that Renee touched on, which is the donations tax. So keeping track of those donations is essential. As Africa offers a tax exemption threshold that can help minimize those taxes, which are currently limited to 100,000 Rand. Another strategy, Sarah, is involving using estate planning tools such as establishing interviewer's trust. If the trust is correctly established, assets transferred to your IV trust are removed from your estate. And by doing so, Sarah, you can separate those personal assets from your estate, potentially lowering the estate duty liable and helping protect and grow the assets after death. Incorporating financial products like life insurance into your estate plan is also advisable. Insurance policies can provide immediate liquidity, which is something that is most commonly overlooked, just to cover those administration costs, which includes those tax liabilities as well. And my recommendation is regularly updating your will to reflect changes in asset and family dynamics to ensure that your estate plan remains effective. Estate planning goes beyond a mere process, Sarah. It is a strategic approach to minimize estate duty by implementing these strategies, and you can efficiently manage and lessen the tax burden on your estate during that more assets that are transferred to your heirs. Sarah, I mean, in tying this up, my advice is that always ensure that that you engage a qualified professional just to guide you on some of those taxes or tax advice that you would need. because this area is obviously quite highly technical and a very specialized area of law. Thanks.
Thanks, Dylan. Really, really appreciate your input there. And thank you for making time to join us for this session. You know, with everything that's just been said by you and Renee, clearly estate planning is critical to this whole process. It really impacts how estate administration is done and how well your legacy is transferred to the next generation. So that is critical. This is the month where it's Wheels Month. Let's just make sure that everybody goes back, sits with their financial advisor, and ensure that they do proper estate planning. That was a mouthful. At this point, before we tackle the second last part of the webinar, I'm just going to ask Verity just to take a 2-minute break and play us a video so that we can recalibrate our brains and be ready to gather more information. Thanks, Verity.
The truth is, there is life after loss.
I miss Mom.
I know you do.
Is there a phone number in heaven? Is there a phone number in heaven?
No, what's this for?
For your heart.
What you mean for my heart?
I heard you said to Granny your heart was broken.
I'm not worried about the money. I'm just not as good at this mom stuff as she was. The boys miss her all the time, and so do I.
Everybody!
You know I love you, right? I'm sorry I couldn't be there. The doctor's running late again. But listen, you know you're the strongest player on the field. You make me happy in my heart, boy. Never forget that, see? Love you. I'll see you later, okay? I've gotta go.
Apologies, colleagues and everyone. I see we've played a...
Hello,
Oh,
this
here we go.
is Dr. Makanya. Did you run any further tests? Thank you. Bye-bye.
I'm off to golf. So you have the whole house to yourself.
Are you going to have that contract signed?
No, today I'm only practicing for my retirement.
Wait.
It will be in a minute.
Okay.
Good night.
Good morning. See you later, love.
When you finally have your house to yourselves again, you don't want to keep having to go out for work.
He has no plans to marry. That's why I'm giving him half the business.
What about grandchildren?
That's why we have to stay. I wish we had more time together. Life's too short. I wouldn't know what I would do if I lost you.
Love, you'll play more golf. You know that's bad for you.
Maybe I should play more golf.
Thanks for that, Verity. That was just a bit of small ice break just to recalibrate our brains and come back. I know in the first part we had quite a lot of information overload, and we will continue, with the webinars into next year. Giving further information, but it was important that we unlock the process, go through the detail. And I think for me, this is where I want to stop and say to people, just to get an appreciation and understanding of how cumbersome this process is, how admin intense it is, how technical it is, and how much complexities are involved in the estate administration process. With that said, I want to now look at the challenges that we experience within the estate administration process. Shireen, can you maybe take us through what are the common obstacles or challenges that are faced during the process? So here I am, I've got a deceased, there's a deceased member in the family, I'm going through the process with Absa. What are the type of challenges that I could be, or obstacles that I could be faced with this process?
One of the most common issues faced in the process, Sarah, is the issue around shortfalls. So a shortfall refers to to an illiquid estate. So there are sufficient assets in the estate, but not enough cash to pay or settle the claims and the administration costs. So the options available to the family in this instance would be either for the beneficiaries to pay in or settle the shortfall if they wish to retain the assets, or to take over the debt in the estate. So a typical example of that would be where the property bequeath is, or the asset bequeath is a fixed property and there's a bond on the property. The beneficiaries may apply to take over the outstanding balance on the bond in order to retain the property. However, they then end up inheriting an encumbered asset. The last option would be the sale of assets, which is then also dependent on the market and may not end up placing the beneficiaries in the best position at the end of the day. If one considers what the significant assets are in today's day and age and what we most commonly come across in estates, the assets would consist of fixed property, furniture and household effects, and motor vehicles. If an executor is to sell these assets to settle the debts in the estate, then the family, who are already going through a very difficult time, may end up also not having a roof over their heads. So it's really very difficult in a number of respects when dealing with a shortfall in an estate. So I will never forget an estate I dealt with a while back where the surviving spouse and the deceased were well in their 70s. The surviving spouse was not aware of significant credit card debt the deceased had incurred. And in order to retain her property, she was actually selling off some of her movable assets, like the motor vehicle. And I can remember even a fridge, because the debt was quite extensive and we could not settle or negotiate around a reduction around in terms of those claims. So it does place the beneficiaries in quite an awkward position when dealing, or a difficult position rather, when dealing with a shortfall in the estate. And there are many opportunities through proper estate planning to avoid and to really solution, so that families do not sit with cash-strapped estates that can really have very negative consequences for them. Another challenge that we've dealt with, or that we see quite commonly during the estate administration process, relates to divorces, and specifically where, for example, Mr. Smith gets divorced, and within 3 months of his divorce being finalized, or after 3 months of his divorce being finalized, he does not amend his will. So the law directs that if you die within 3 months of the divorce being finalized, it is assumed that you intended to final or update your will, and if your spouse was a beneficiary, that spouse would be excluded from inheriting. However, if the will is not updated after the 3-month period has lapsed, the assumption is made that you intended for the ex-spouse to inherit. So what typically happens, or what we find, is that the divorced spouse, or Mr. Smith, enters into a new marriage. And so when he passes on, we sit with an estate where, if he was married in community of property, one half of his estate goes to his surviving spouse, and his ex-spouse inherits in terms of the will. So it's very difficult to get consensus around the distribution of assets in such a situation, and causes a lot of issues in the estate that the executor needs to deal with. Other issues relate to financial statements where there are business interests in the estate. We often find that the financial statements do not exist at all, or have not been updated in a while. Again, it causes a lot of delays, especially if the person responsible for the financial statements cannot assist in a short period of time in updating the required financials that we require for the estate. Lastly, Sarah, I also want to mention the impact of suretyships, and it's important for us to consider our actions when putting pen to paper, and understanding the implications and the consequences of such actions. With suretyships, the creditor may call up the loan and lodge the claim against the surety's estate. This will result in less money being available to the beneficiaries for distribution. And then lastly, outdated wills. we should avoid sitting with the unintended consequences of an outdated will. And it is important for us to update our wills as life events occur and our personal circumstances change. Furthermore, what's important with wills is to make sure that beneficiaries and the bequests made to them are clear and concise.
Yeah.
There may not be any confusion as to who is inheriting and what they are inheriting. We had a case as well where a benefit was left to um, Peter James, and Peter James was not only the deceased son, but also his brother. So it was very difficult to establish who the deceased was actually referring to in his will. Furthermore, we should also ensure that there aren't any ambiguous clauses in the will. Again, dealt with a matter recently where in the one clause the deceased mentioned the product with the insurance company, and he left this policy to certain family members. In the next clause, he mentions the policy number, again with the same insurance company, and he leaves it to another group of family members, only to find out that both clauses relate to the same insurance policy. That matter is still receiving attention. And so, Sarah, that is, in a nutshell, the implications of, aspects that are not given attention and that typically would hamper the finalization of an estate.
Yeah. And I mean, I'm listening to you speak. I can just imagine if you're saying an estate takes 9 to 12 months, if all these things are not in place, how much it actually delays the process. Now, Sherin, you've spoken a lot about obstacles relating to an individual where it could be a beneficiary involved in the estate or with the deceased. What are the challenges experienced in the industry?
So apologies, Sarah, before I go to the industry, there's one more aspect that I needed to touch on, and that's with regards to minor beneficiaries. So in the absence of a will, a minor beneficiary's inheritance will be paid to the guardian's fund, which is with the Master of the High Court. Likewise, a beneficiary can be awarded benefits in terms of a will, but if no provision is made in the form of a trust, their inheritance will also be paid to the guardian's fund until the beneficiary attains the age of 18 years old. So I don't want to elaborate too much in terms of the process and the frustrations one can experience in claiming funds from the guardian's fund. It is cumbersome, the queues are long, and especially where there's a financial need or a maintenance need for the minor beneficiary, it could really result in a lot of frustration for the family. So hence, again, with the drafting of the will, some consideration should be given to creating a trust, and for the trustee to take care or manage the interest of the minor beneficiary in accordance to what the trust deed stipulates. Coming back to the challenges faced by the industry, and they are numerous, Sarah, especially the industry at large, and since particularly the pandemic, the industry has been faced with high inflows, limited capacity, which has resulted in backlogs, and not to mention the impact of load shedding on business operations. But on the positive side, we've seen organizations really optimize their digital strategies to improve service delivery. And whilst this is still work in progress, it makes one hopeful and quite optimistic that going forward, we will see improved efficiencies and better turnaround times. Ultimately, this is important for the family members and the next of kin dealing with an estate. It is a process that, ideally should be concluded as quickly as possible, so that the mourning process can continue without having the burden of an estate administration process to contend with.
Wow. Yeah. And that's quite true, Sherin. We are regularly faced with disruption in the industry and different industries, and these type of things occurs, and it's a wake-up call for a lot of businesses within the industry to review their ecosystem, look at, do we have sufficient capacity? Do we have sufficient technology and so on to deal with these type of challenges? But it's good to hear that, the industry is working really hard to turn around the challenges that we've experienced. I think the last part that I want to close with is really looking at digital assets. and the growth of digital assets. What are the key considerations for managing digital assets? I'm just thinking in my head, when was the estate administration law put in place? Now that we're starting to have ample assets out there that are digitized, how does that impact how is that covered in the legislation itself? And for me, it's something that obviously quite a lot of work needs to be done within the industry. But Renee, can you just give us some insights in terms of how do you manage those digital assets and online accounts, such as your cryptocurrencies, your digital media assets during the estate administration process?
Yes, thank you, Sarah. So yeah, this is very, very important because our digital assets are currently our reality. And this is evolving every single day. So we need to learn how to deal with them properly. So just a few pointers to be aware of should you own any digital assets or online accounts. So I think the first and foremost is that it's very important for your family or your executor to be aware of what digital assets you own so that it can be dealt with as part of your estate administration process when you pass on. So as a starting point, it would be advisable for you to make a thorough inventory of what digital assets or online accounts you have and how to access them. So this will include documenting your username, your passwords, or any other login information. Because remember, without this information, your executor's access to these assets would be problematic. As a further suggestion, you should indicate in your will where this inventory can be found after date of death, or alternatively, attach a copy of this inventory to your will. When considering your executor, choose an executor that understands such assets and how to administer them. That's very important. The other thing that you need to consider is that digital assets are generally owned outright and can be transferred in terms of a will. For example, your Bitcoin and other forms of cryptocurrency. But there are some digital assets that may not be transferable. So it is important to identify this and understand how it will be dealt with after your death. And in terms of this, your executor will be guided by the specific terms and conditions associated with each of these assets when it comes to the transfer or sale thereof. Remember, crypto assets are regarded as movable assets and incorporeal assets and is included in your estate duty purposes. For some online or digital accounts, you may appoint a beneficiary for these accounts. However, there must be specific reference in the will which gives the beneficiary not just the authority to manage the account, but also the right to the content of the account. We need to make a distinction between these two. Some accounts, such as your Facebook and Google, allows users to indicate how their account should be treated after death, while others, for example, like Facebook, LinkedIn, Instagram, these will be determined by what's in the end user agreement. So, Sarah, as you would note, the landscape of digital assets is changing daily, and we need to adapt and know how to deal with them while we're still alive.
Thank you for that, Renee. Very important. And I'm really looking forward how this is going to transpire into the future. Shireen, just your closing statement in terms of how the law impacts digital assets.
Sarah, Renee has given quite a very good indication of how some of the assets can be dealt with in terms of our current laws, but clearly there is a need for further revisions to be taken into account, and for apologies, Sarah, and for the for estate practitioners to work very closely with judiciary as well as other service providers, especially those worldwide, to come to an agreement or to develop certain standards, best practices, and a framework for effective estate planning, as well as estate administration process specifically for digital assets. Yes, amendments have been made to the Act in the past. However, they've not touched or covered any aspects relating to digital assets, so there's still much work that needs to be done in that regard.
Great. Thank you so much to our panelists. Renee and Shireen, that really was insightful. It was quite a lot of information, but very helpful information. And I know that for everybody online, you may not have captured everything that was discussed, but I guess this is where it's important to be in touch with your executor, where they can take you through the details, speak to you through each stage of the process and explain everything. But more importantly, please do understand that this process is impacted by how you draft your will, how well you draft your will, and it's also impacted by proper estate planning. So at this point, it's not just about going into an office and sit down. Do your own research, speak to your advisor, ask you a lot of questions, make sure that you leave your loved ones with a peace of mind. I'm going to open up now for questions. I am aware that in our first installment of the webinar, we had a number of questions that were not answered, and we are still putting a Q&A together that we will be sending out to the rest of the attendees. So if I can just ask Verity, I'm not sure if we've got questions on the chat that we need to tackle.
We do have a number of questions, Sarah. The first one is from Angelique Abrahams. She asks, when a South African citizen has immigrated to another country, is it mandatory for an executor to be appointed in South Africa to manage the estate if the deceased held assets are in South Africa?
Great, thanks for that. I'm not sure, Shireen, Renee, who of you would like to take that question?
Sarah, I'll give a stab at it. So it is necessary for the estate to be reported in terms to the Master of the High Court, and the estate will be governed according to the requirements of the Administration of Estates Act, sensing the deceased person would have left assets in South Africa. And so the Master of the High Court will consider if, for example, the deceased person left an overseas or a worldwide will that deals with the assets outside of South Africa, and there are certain bequests made in terms of that will, the master will consider that information. But the bottom line is, Sarah, that that estate needs to be reported to the Master of the High Court. It will be considered in terms of our laws, and yes, that basically, covers that. There was something else I wanted to say around that. And furthermore, in terms of appointing an external executor, our laws also require that the executor be, or the agent of the executor be domiciled within South Africa. So that is an important requirement as well. Renee, I don't know if there's anything else you wish to add.
No, Shireen, I think you've covered everything. Thanks.
Thank you. Verity, can we just go to our next question?
Sure. Our next question is from Vincenzo, and it's who are the typical interested parties that are invited by an advertisement for 21 days to scrutinize the distribution account?
That would be anybody that has an interest in the estate, right? So it could be a creditor who wishes to ensure that his claim has been noted in the liquidation and distribution account. And if not, then his opportunity is to lodge an objection with the master's office for the account to be reframed if there is merit to his objection. Furthermore, it could also be a beneficiary who, after viewing the account, feels that they've not been taken into account, and again, lodge the objection with the master's office. So with the objection, they need to provide reasons and also supporting information for the master to consider and to make a ruling on the matter.
Thank you for that, Shireen. I think the next question is from Renee. If no provision is made for a trust where the beneficiaries are minors, how are those funds dealt with? Is it paid to custodian guardians of the minors?
Sarah, I'll take that question. So that is why it's very, very important for us to consider minor beneficiaries in a will, because if no provisions have been made in the will, those funds will be paid to the guardians fund. And as we all know, and if we've experienced trying to get funds out of the Guardians Fund, it can be a schlep. So yeah, so think about it carefully. Ensure that you have the trust provision in your will where you have minor beneficiaries to avoid those funds being paid into the Guardians Fund. Thanks, Sarah.
Thanks, Renee, for that response. We're going to go to our next question, which is from Mo. Should a deceased have an Islamic will, which Islamic institution is responsible for calculating the distribution? And is there a cost associated with the service? So,
Sarah, I'll take that question. If you don't mind.
Yeah.
So what we generally tend to do is we contact the Jamit Ulama Council, and what they do is they give us a certificate in terms of Sharia law regarding the percentage of distribution that we need to deal with. And in our experience, there's no additional costs incurred for the services.
Thank you. I see a thumbs up there. The next question is from Zeti. Can you please collaborate or elaborate with regards to executor fee, agent fee, and the liability thereof? Sherin, do you want to take that one, or Renee? So I think the question is, can you please elaborate with regards to the executor fee or an agent fee and the liability thereof?
Okay, so Sarah, if I understand the question correctly, the percentage of executor's fee as per our statutory requirement will be 3.5% calculated on the gross value of the estate. So that's the statutory requirement. An agent's fee will come into play, I suppose, where there's an external executor who appoints a professional as their agent. And this fee obviously will still be 3.5%, but is highly negotiable. And all of these fees needs to be recorded in the liquidation and distribution account before it's submitted to the Master of the High Court. I hope that answers the question.
Yeah, it does, Renee. And I like the fact that there's, transparency in the L&D or the liquidation and distribution. So there aren't any fees that are hidden or anything like that. We'll go then to our next question. Will beneficiaries be liable for any debt that won't be covered by assets in the estate? I think we did cover this one, but if maybe one of you can just touch on that again.
Hi, Sarah. So yes, to confirm, if it's assets that they wish to retain, then they would have to settle the debt in the estate. There is a different scenario in the event of the estate being insolvent, and that would be where the liabilities exceed the assets. In that instance, there is nothing left to inherit because all the assets are basically converted in order to settle the creditors, and but ultimately, yes. So it all depends on the circumstances and whether they wish to retain the assets. I think that's one important factor that is taken into account.
Great. We have actually come to the end of our webinar. I see there's just a few more questions that we haven't tackled, which we will then deal with and send out in our Q&A. But I just want to thank everybody for their time. I want to thank everybody for, making sure that they invest in their knowledge and understanding how to, how an estate is administered, and that this would actually help you with your estate planning. Verity and team, I just want to thank you a lot for making time and making sure that this is a success. And I want to thank our panelists as well. They really did well. And I mean, I work in this department, but every time I listen to them, I learn quite a lot. So thank you so much for all of that. And have a wonderful day. Thank you.
Thank you.
Thank you.
Thank
Bye-bye.
you so much.
Bye.
Bye.
Thank you.
Thank you. Bye-bye.
Thank you and bye bye.
Thank you. Bye.
Thank you. Good